I'm Laurie from Hudson Valley Bookkeeping, and in this video, I'm going to show you how to structure your chart of accounts on your profit and loss so it's easy to calculate CAM at year end. All right, let's get started.
Okay, guys, we're going to talk today about how to read your profit and loss in order to do your CAM reconciliation. We will also go over understanding where you're going to pull your expenses for in general and what you can do to make it easier so that your CAM rec is less painful this year. So let's talk about setup of your chart of accounts. However you set your chart of accounts up is going to kind of make or break you when it comes to doing your CAM reconciliation in January. Okay, so I'm going to show you a couple things that I do that make it a little easier. Okay, so rental income. I have put the CAM allocations next to the income code just so I can tell what's happening here. And now look, this tenant wasn't even here for the entire year. So that would have to be a special calculation for that tenant because they weren't there. They shouldn't really share in expenses if they weren't there for an entire year. Okay, the other thing is this only adds up to 99%, and that happens. And I would not, some people talk about rounding. I don't round. I go exactly by what the lease says. So if the lease says 23, you need to calculate at 23. It's usually almost always right there in the lease. It usually has a proportionate share. And there are sometimes that it just really does not add up to 100. I would not round up. I would just do it exactly per your lease. So if your tenant audits you, there's no room for question. Okay, so I just like to do this here. This just helps us see, basically it's just a reminder of where you're at. And, you could see here, you're not going to be able to capture that part. That's going to be lost to the landlord for that piece. Okay, now here I separate out as well. We have base rent up here at the top, and then what we are charging the tenant as a estimated CAM charge should be itemized on your profit and loss. Now, how you do that, this is like another video, is you would have a specific item on the invoice that relates to these specific income codes, right? So you're gonna have an item for your base rent and then an estimated CAM item that then ties to these income codes. Okay, so that's really important that you understand those pieces because right now we don't know where they are set up in their CAM rec. So I will make a follow-up video that follows me doing a CAM rec based on these percentages. Okay, now this is what I like. Now everybody kind of does it different, and I have some clients that want things totally moved around, but for me, being a person that we're trying to figure out like really how much does it cost to operate your building or buildings, I think it's best to put all of your CAM expenses up in the cost of goods section, because then you can do all overhead and, not operating expenses of the building, but just more the G&A, which is short term for general and administrative. You can keep all of that down below. Okay, so now you know my mentality of why we're going to do CAM expenses up in cost of goods. It's just really to keep those costs segregated from the rest of your overhead. This way, you know that you're only using these categories to calculate your CAM. So it's going to be really easy to export this to Excel. It's also very easy if your tenant wants to audit you and they want to understand why their bill was what it was. You could literally send a general ledger of the total costs multiplied by their proportionate share, take away their prepayments, their estimated CAM fee, and it's very simple. It gets really hard if you have these all mingled around. Okay, so let's keep going down to some other things we should look at. Now we have expenses, right? So now this is where we're putting just the overhead costs. And what do we have in here? And I have a couple of things I want to mention because I say this over and over again. Every lease is different. Every triple net, every base lease, you name it, you have to read your leases because what is allowable in one CAM charge for one tenant may not be allowable for another. So what I would do in that case is I would have all definite allowable on all, right? It's just without a doubt always going to be part of the CAM calculation up in the CAM expenses. And why do I say that? Because the difference is that I have read certain leases where the accounting for the for that LLC, that the tax preparation fee was allowable in the CAM calculation. Okay, so sometimes it is, sometimes it's not. I don't always see accounting fees allowed in there. They considered it, I think in this case, it was an office building that it was just part of the normal management of the company. But also in that scenario where I'm speaking of, there was no real management fee, which in this case, we have a management fee every month. So that could have been one of the reasons. So like I said, just make sure you're really reading what are the exclusions and what is included because you just want to be sure. You don't want to have anything else happen. Usually legal fees would not be included. That's usually for like a lease negotiation. Commissions. Commissions you are paying to acquire a new tenant cannot be included. And then we just have here this general administrative, and these are things like maybe your QuickBooks software, any other things you're doing. But again, if you're paying a management fee out and that's being calculated, that's kind of encompassed. Obviously not your debt costs, like your mortgage interest. So that is where we are. So just again, don't take this. In real estate, every deal is different. So just remember that just because I'm saying now that accounting is, we're not going to calculate it, doesn't mean that in a lease you may have acquired or for whatever reason, like I have someone I was speaking to that said every one of his leases was done by a different attorney and none of them are the same. And he has a triple net issue because he's behind in his CAM recs. That would make it harder. So I would also recommend, trying to keep your leases pretty standardized will help when you go to do your CAM reconciliation. Okay, let's go over the biggest things I'm saying in this video. Separate your base rent from your CAM estimated payment. You have to have them separate because it's going to be a disaster, especially if the rent changes in mid-year, okay? So here we go. Here's our base rent, that's the top. Here's our CAM. Now, we're segregating anything that's definitively only going to be a CAM calculation that is supposed to be shared proportionately. We're going to put those up in the cost of goods. Okay, so we've gone over the two types of income I want you to break out. So it's very easy for you to do your CAM reconciliation at the year end. We know tenant one is 23% of our total 314. I will do a follow-up video that I show exactly me going through this process, tenant by tenant, and I will show you the workbook I use. But again, CAM expenses, if you put them up in your cost of goods sold, that way it's at the top. You're able to see better like what your gross profit is. And then you can go and look at the other allowable expenses that are tax deductible, but that aren't allowed in your CAM reconciliation. All right, I hope this has been helpful. If you feel like you need some guidance with this and have been unable to get your questions answered, I specialize in commercial real estate bookkeeping and I do QuickBooks coaching. All right, have a great day.